All right, welcome to the Oxen Group Nightly. My name is Dave Ristow. I'm the president, founder, and CEO of the Oxen Group, and we are excited to have you here with us tonight. Today was a pretty fun day in the market. Before we get to that, though, just please check us out at www.theoxengroup.com. And actually, right now we are running a 50% off special on all of our memberships. So our premium membership, which is usually $130 a month, is only $65 a month. But that deal ends tonight at midnight. But we're on Central Time, so 1 a.m. Eastern Time. You can get a half off membership. All you have to do is email me at contact@theoxengroup.com. That's CONTACT at theoxengroup.com, and just express your interest in one of the membership levels, and we will help you get set up with a really nice deal on a really profitable membership. So you're probably wondering, how did we manage to make 21% today? 21%. Well, we're going to get into that, but first we're going to look at a Thursday market wrap-up. We'll talk about our position in Netflix, our 10% gain in Endeavor Silver that was helped with that, what we learned from SunPower, some of our other gains and current positions, and our forecast for tomorrow. So the day was not very good. I mean, we had a 220-point down day, and there were a number of factors that caused the market to move lower today and finish below 12,000. One of the main reasons was unemployment claims came in higher than expected at 397,000. This comes after a week when they dropped to their lowest levels in 2 years, and the miss sort of, I think, nullified a little bit of some of the gains that we had from last week on the jobs report, and sort of, it maybe kind of made people think maybe that was just a blip, and we're not quite as well on the path to recovery as people think. But it was kind of a compounding factor. Just really everywhere you looked, there was bad news on the day. We had bad earnings. We had weak global news. You had intensifying fighting in Libya. There was China reports a trade deficit. It was a very surprise trade deficit. It was showing some weakness in their economy. Spain's credit rating was downgraded. You had fighting that started to occur in Saudi Arabia as the government had to shoot protesters today, or did shoot protesters and have to. And there was just Japan had bad news. It was just all around just a bad day. It was just very, very bad news all around. And honestly, I think the market jumped down, okay, but really stayed at where it was the whole day. And I think actually, while it was a bad day, I think we have to look at it and say, okay, we had a bad day. Let's see what's going to happen tomorrow. And I think that the fact that we dropped so much right away, but didn't really drop too much lower throughout the rest of the day is the silver lining that you can take away from the day. The market opened lower and actually started to gain traction throughout the day. We started to see a bounce back to what we had identified as a pretty good support level at 12,050, but we broke through that, and then reports of violence out of Saudi Arabia in the middle of the day sort of re-sparked some oil gains and took down equities with them. And we ended the day right below 12,000. So it was a key holding point to see if we could hold 12,000. We didn't, and that makes me worried about tomorrow. If we're gonna have more losses tomorrow, I'm not sure. We'll see. It's gonna be an interesting day. We'll get to our forecast in a little bit. But really, the important thing to talk about today was how we did here at the Oxen Group, and we actually did very well today. We had one of our best days that we've had all year. And that surprises me and probably everybody else. But we entered a position this morning at Netflix at 195.33. We exited 2/3 of the position throughout the day for a 3.2% gain. It was a great day trade for us. We didn't even expect it to be a day trade, but the stock had a lot of support. We're going to show you that in a second here. But the real key was that they had a Bank of America Merrill Lynch upgrade today. And basically Netflix kind of came out and said, you know what? We're not threatened by Facebook. We're not threatened by Amazon. We got a great business here. We've got way more movie titles than either of those companies do, and we've locked in really low prices for a really long time that those companies can't get. And I think that's the key about Netflix is that. And so here you see this is the chart for Netflix, and we bought today here at 195.33, and we're able to sell at different points throughout the day. And I really like this chart a lot. I think this is a really very, very nice chart. You had the stock here. It's at a very key support level. You can draw a line up from there, and it really, literally, it hits right at the bottom of this. on the upward channel that this stock is in right now. And the stock is, if you look at fast stochastics, they're breaking up. The K and the D lines separated tremendously today. That's a huge difference between them, 13 points. The RSI is looking like it's trending up. It was at its lowest levels in the last 3 months. This stock barely ever has dipped below even 50, let alone 40. And so that's showing tremendous weakness there. And you're also seeing some good volume, a lot of volume increasing here, buying up, some interest coming back into stock after it lost a lot of interest here. And I think overall this is showing support. It got an upgrade today that could spark some other upgrades, and it also just sparked some interest in the company. And the stock showed tremendous strength in such a bad day. That is the key to this. This stock went up 4% on a bad day when the market was down almost 2%. I mean, I know it had the upgrade, but still, there were companies that had good news out today that couldn't hold it against. Smithfield Foods, one of our holdings going into today, was open at 5% and closed in the red because the market just took away so much from the companies today. Netflix support shows that this is at a great support line and that this stock is going to move higher. We have a third of our position left. And we're looking to hold this to 205 to 210. Maybe if it can break above 208 here, this is going to have a lot of support moving forward. So we're looking for good things from this moving forward into next week. We also had a really great short sale that we had in Endeavor Silver. This is a stock that's was on our $5 list, still is, but isn't really really a candidate anymore. The $5 list is basically a group of stocks that are around $5 that we think have a lot of potential to really do well moving forward. They're good companies with good fundamentals and would garner a lot of attention from mutual funds once they break the $5 barrier, because mutual funds can't buy stocks below $5. And this company's had a lot of success as of late with the way that silver prices have been increasing. And then last week, I'm sorry, excuse me, I think it was at the beginning of this week, the company announced that they were, it was actually at the end of last week, they were going to be transferring to the New York Stock Exchange, and you can see it was right here, and this stock flew up, okay, to start out the week at $10. And just back at the beginning of February, this was a $6.50 stock. So that's a pretty significant gain, over 50%. In 1 month. And that kind of gain is great for the stock, and it's great for the company, and this is a good company. This is going to be a great stock moving forward. I don't have any problem with that. It's just that you can't gain 50% in a month and sustain that. The stock was, breaking Bollinger Band, breaking it. Fast stochastics were at, really high levels. RSI was above 80. I mean, above 70 is a pretty red flag for a short sale. Above 80 is like, this is way too high. Stock was way overvalued, and then when we got some weakness in the market, it was just like, this is a definite short sale. We picked it up yesterday at 9.52, close to the end of the day, after we missed a huge short sale opportunity, and then it opened on today a much lower. And this was kind of a no-brainer setup for a pretty significant short sale after it broke out. And the thing about it is that you would, I think, in a typical stock that maybe is less likely to move down would be something that's more respected in the market. But Endeavor Silver, was just last year, below $5, almost a penny stock. So it has made a big move, and a lot of profits were taken. We had a big day. I mean, other gains, we were able to we entered and exited a short sale this morning in NetEase for a quick 1% scalp. We took another half position in Apple to average down to 349.69. We didn't exit any of that, so that doesn't include. We were stopped out of SunPower for a 2.7% loss this morning, and we're going to get talking about that a little bit more. But the big things were we exited the last portion of our SFD position for more than a 5% gain. We exited the last portion of our ANN position for over a 4% gain. I mean, these were both gains that we took today. And was intraday, so that was really great. And then we exited another 25% of Zumiez for 1.75% gain, and we held 25% of that into after hours, into earnings, and the earnings were pretty disappointing. But the stock was down as much as 11% in after hours, but last I checked, it was only down about 5.5%. So should probably end up taking away some of our gains, but we'll end up with a a small gain on that one. Unfortunate that we weren't able to take away more, but the stock just didn't break out the way we had expected, and then the earnings were much more disappointing than we had expected as well. The big loss of the day though was SunPower, and that sort of took away from some of the fun that we had today. And what we learned from SunPower, um, you can't chase a trend. I think that's really what we learned from SunPower. And this is an important lesson for everybody. You see stocks that have dropped significantly, okay, and you want to buy them, and especially when you think that there's a piece of news out that could provide a catalyst for it. But the problem with the solar sector right now is that analysts don't like it, and people can. They're all in downward trends, and so when we saw that the news had came out, we bought it, and because we thought maybe that could be a bottom. But the problem is that it's hard for a stock to bottom when it's not at a support line, like here at 1518, or that it hasn't gotten some kind of leadership, like a leader in the sector, to help pull them up. And so with SunPower, we bought in the middle of this downward trend. Now this is probably a bottoming here in this area. I mean, maybe it can go down. Maybe this is a bottom here if it can get down to 14. But really, the fact of the matter is that SunPower and the whole solar sector hasn't shown that it has strength. And when we bought SunPower, we bought it on a piece of news that was company-specific strength, but the rest of the sector wasn't showing much strength still. Some of the leaders like First Solar and Yingli Green and LDK on that day that we bought were opening up down 2% in pre-market. And so we had no sector rally, and we were trying to guess that SunPower had a bottom here. When it didn't, because it had no support line. There was no support line. I mean, here's a great support line. If we had seen this come here, and that we had bought this here, and this was where that new piece of news that they were sending panels to Toshiba was available, then yes, that seems like a good place to buy it. But we bought it here in the middle of two support lines, and it wasn't going to rally here. It actually got resistance there and then dropped, and then it dropped today much further, broke through this support line. So if I had bought it here and it had broken through, we would then say, okay, that was just a trade that just did not work, and it just was bad luck. But we actually made a mistake by buying it here, and I'm willing to admit that mistake. And what we've learned from that is just that we need to be more careful about buying stocks in downward trends if they're not at a support line. And if they're in the middle of a downward trend and it's not on a support line, it's highly unlikely that it's just going to quickly reverse the trend, especially in the market we're in. So we have to be careful about those things. For tomorrow, I think I have really no idea. I mean, the market looked really weak today, and there's definitely, if my gut is just to say, we'll probably go down some more tomorrow. I mean, we had weak earnings and after hours from Aeropostale, National Semi, Smith & Wesson, and Zumiez, the four basically biggest companies that reported all were weak. And then we only have AnnTaylo going tomorrow that has any weight at all. Retail sales are out tomorrow. If they're good and the Michigan Consumer Sentiment Index is good, that could be a small catalyst that I think could help us out. But I think we just need some news globally to help us out. There was just so much bad news out there today. It really plagued the market. And unless there's some kind of reversal of that news, I don't see any reason why people will want to buy things up. And that's why we locked in a lot of gains today, took away a lot of our positions, and got out of a lot of stuff. And hopefully tomorrow we can see a setup for, there's a lot of bargains out there right now, and we are buying stuff up. We bought up Apple positions. We bought up some Netflix. We've got some room to work with on getting into some other new stuff. We actually put out a list of stocks that we like right now that we're looking at, but we're not going to purchase any of those until we know for sure that we're going to get some of the market, so the market to start moving in the right direction again. Well, that's going to do it for today. Visit us at www.theoxengroup.com. Email us, call us, be a part of 70% accuracy.